Good morning and welcome to the market forecast for the first trading day in May. Welcome. We're looking forward to having a good, profitable month this month. If you're in the markets already, hopefully they're heading your way. We've got a little bit of activity going on already this morning. My name is John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking for accurate context, good risk management, and patience for all of you. Economic numbers this morning, nothing all that really impactful, although there may be some eyeballs on this as we continue to monitor the creeping in perhaps of inflation. 8:45 this morning Central Time. The PMI final is due out, 9 o'clock Central. The ISM Manufacturing Index due out, as well as construction spending. Looking forward through the week this week as far as economic numbers are concerned, international trade in goods and services tomorrow. That's at 7:30 Central Time. Nothing that impactful, just typical EIA petroleum status on Wednesday, jobless claims on Thursday, and the unemployment numbers due on Friday. So not a lot of really important economic information due out until looking like Friday with the unemployment numbers due out. Of course, there will be a lot of eyeballs on that, and we will be monitoring as the markets get closer and closer to that. As far as news is concerned, obviously, U.S. stock indices are opening higher on the first trading day in May. Investors found some bargains on that move down near the weekly low on Friday. We were talking about how important that was going to be on Friday, and boy, we certainly did not find any acceptance below it. So hopefully you found some opportunities down there, as well as many other investors seem to pick up some bargains down there. We'll see that on the charts here very shortly. Apparently the European Union has ended travel bans after 1 year. Important legal battle this morning starts in California in court as Epic Games attempts to prove that the Apple App Store is discriminatory and anti-competitive. This should be an interesting one, ladies and gentlemen. As far as earnings today are concerned, nothing hugely impactful. Estee Lauder, Lowe's, and Wynn Resorts all due out today. Make sure you like, share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. A brief look a few minutes ago at the VIX has VIX lower at 1850. The dollar index lower off its high, but a pretty good move to the upside on Friday, back above that 91 level at 91.13 currently. And the 10-year yield steady this morning at 1.62%. Always saying good morning to everybody. Good morning, Brian. First one in the room. You won the prize this morning. Theo, good morning. Bill, good morning. Caesar, Felix. Yes, let's crush this month. That sounds like a great idea. James, Vince, Ednelson, Jim, Andre, Colin, Sunil, good morning. Vici, good to see you. Greg, my guy, JD, had some fun this weekend. It was good to see you. France, Shady Trader, Rob, Jason, George, and Shannon Turner. Good morning to everybody. I'm going to put the link in for group coaching here on Wednesday. Really good session last week. Hopefully you were able to attend. If you weren't able to attend last Wednesday, certainly sign up and join us this Wednesday. You can email in questions, of course, and then, of course, as we get to them, hopefully I will be able to get to them. I apologize if I did not get to your question last Wednesday. We've got an hour to do so we're going to do as much as we possibly can. Pipe Bowls, good morning. Nick and Jerry is awake. It's a good thing. I'm awake, getting settled in for the trading week this week. I'm a slow starter on Mondays, so I tend to just kind of look for opportunities, wait for things to kind of settle down, and wait for the opportunities to come to me. I find if I go looking for opportunities too early, I'm going to find them, and they may not be the ones I'm looking for. So, again, hopefully you had a good and restful weekend. Hopefully you were good to yourself, did something nice for yourself. We all deserve that. We all work very hard at this. And it's one of those kind of rewards that we have to give ourselves. We have to give ourselves those rewards. And let's jump into the charts. Let's see what we're looking at this morning. Hang on a second. Here we go. As always, I'd like to start with the daily in crude oil. Yeah, right. I need my spectacles for this. All right. Obviously, we broke out of our coiling activity. We're still holding upside structure. We're centrally located between weekly kickoff high and weekly kickoff low. Really just kind of meandering through this kind of, I don't know, medium short time frame structure that we've got to the upside. We had some pretty decent volume on this move off the high from Thursday into Friday. Little lower on the volume, but we did add 6,700 in open interest. Looks like on the commitment of traders, we haven't seen speculative longs in this market this low for quite some time. So there's definitely some ability for traders to begin to build positions, which they did seem to do on Friday. So it seems as though the real question with crude prices remains demand as India continues to suffer some really high infections of COVID. They're one of the biggest importers of crude oil, and if they're not going to be moving around all that much, then that's where the question of demand remains. Always looking to see what we can figure out in the charts, and we have to some degree, keep an eye on the fundamental information that is available to us. So the volume and open interest continues healthy on a gentle upside structure here. Take a look now into the 30-minute chart. So really just a overnight kind of a mess. The market just opening up, finding a bid relatively early, but I'm just going to really expand this as to how range bound last night really was. I mean, our overnight low 62.91, our overnight high up near the 64 previous weekly kickoff level, which found a degree of resistance. We don't really have any overnight inventory. The market opened in range, has already pushed all the way through a very narrow range here on Friday and a very narrow area of balance or value as well. Settlement is right here, 63.58. I'm going to be suggesting trying to stay patient, as perhaps your best trade locations may come as the day goes on. With no overnight inventory, kind of an important inflection level, past inflection level at the 64 even level. We do have a gap that remains unclosed between Thursday and Friday. Finding acceptance could push the market past the 64 even level and up here to close this gap. And then, of course, we have a point of control up here that doesn't look very prominent, but these are just visuals that the eyes look at, and then when a lot of eyes are looking at it, we see a lot of traders moving towards that level. So a pretty decent start here to the upside, but still inside the overnight session, inside the overnight range. You'd be interested to see how the market responds up here at the 64 even level. The E-mini S&Ps, what a fascinating opportunity last week. We were talking about, we've been wrestling with this 4,200 weekly kickoff level. It remains the weekly kickoff level this week. 41.9950 was our overnight high. If you remember on Friday, we were talking about a possible bigger move if we were to accept below the weekly low from last week. Boy, we sure took a valiant effort down to that level, but we were also unable to reach that level. What doesn't happen can be as equally important as what does. So it looks like we're going to be possibly primed for another regular trading hour test of the weekly kickoff high, that big fat round number, 4,200. We were also kind of speculating that if we were going to be lighting this fire down to the weekly low from last week, that it would be kind of fueled by some profit taking. And I believe we saw a degree of profit taking here on Friday in the E-mini S&Ps. We lost approximately 1,200 in open interest, but nowhere near the kind of profit taking that we may have found had we found acceptance below the weekly low. I've got the weekly low and high here marked in pink lines or purple lines, whatever you want to call them. Just going to try and keep an eye on those levels here early in the week as they may become somewhat impactful again. If we get some play or acceptance below last week's low, we've got some space down there. We may see a decent opportunity for some of these longs that have been holding these longs for quite some time to adjust those inventories. We've got our weekly kickoff high and low, 4,200 on the high, 4,066 on the low end. This would be a more serious market state break if we were to get down to that level. Take a look at the 30-minute chart so we can see what we're looking at early here in the early session here. So our weekly low and high, obviously pretty narrow ranged last week because they're both on the 30-minute chart here. Usually we're not going to necessarily be able to see both of them on this chart. We've got the entire week's range right here. What does it mean for us today? Well, we're right in the middle of last week's range. It looks like we're going to be opening with a gap. Settlement is all the way down here, 41.7450. Put that on your charts. We are going to be opening with a pretty high probability with a gap. That gap is going to put us right back into the value area from back here on Thursday. Is there repair necessary? Perhaps. We've got a high volume node up here, which is basically this point of control up here that was settlement from Thursday. We've got another naked point of control down here. If we're going to fall, and we've got a kind of a high volume node from here on Thursday. So if we do fall into repair, this point of control and this point of control would be obvious levels. And then, of course, if we do reach last week's weekly high or low, that will also be a little bit of an important inflection level as far as I'm looking at it in a little bit longer time frame. But as day traders, it's so important for us to understand the context in the longer time frame. We want to know as much as we can what our competitors are doing, and those competitors are always in multiple time frames. It's a holistic look that we're looking for in these markets. We're going to find them. Well, we're starting the week off here with a gap to the upside in the S&Ps after a relatively range-bound week. We've got our extremes of the week. We've got our gap rules. We've got overnight inventory to the long side. I now hand that football off to you to look for the opportunities that are going to be present here. Pretty narrow range Monday, Tuesday, and Wednesday, but we had a lot of information due out on Wednesday and Wednesday night and Thursday with the GDP. So we had a lot going on, as far as releases were concerned early in the week last week. We don't have all that much information due out this week. So you're going to see markets being probably a little more freewheeling, at least until Thursday when we begin to hedge ourselves and position ourselves for unemployment on Friday. So the ball is yours. Let's see where we go with it. The NASDAQ. Starting with the daily. All right. Raven, I'm glad you made it for the S&Ps just in time. Excellent. All right. Gold. The NASDAQ. Lower volume and higher open interest. Is this new shorts coming into the marketplace? Here's the volume on Friday. We moved lower. We were looking for some possible long liquidation, some profit taking. I think we saw it. Basically took us right to the weekly low, same as the S&Ps. So, we have the weekly low and the weekly high all occurring on Thursday from last week. One day, put in the low and the high. So that kind of tells us that Wednesday into Thursday, all that information was pretty vital for us to look to see how this market was going to respond. 14,000, big fat round number. We've had a couple of closes. We have not truly been able to accept. Found rejection on Thursday. No test of it on Friday. We seem to be kind of coiling a little bit here. We've got higher lows. We've got even highs in a large part. Last week's low will be pivotal if we're going to see if we can find support or find a little bit more of a push to the downside. And of course, weekly kickoff high 14,000 will also be pivotal for us. Take a look at the 30-minute chart here and see what we're looking at. One other thing about the NASDAQ that's a little bit different, same but different. In the S&Ps, we added 4,500 in open interest on this push to the downside. Again, is that indicating that we have some traders willing to take a stand here to the downside? It very well might. But we know that these equities have been running over shorts for 40 years. It's going to be interesting. So here on the 30-minute chart, very narrow range. Settlement is all the way down here at 13,850. 13,850. Put that on your charts. Value low in the neighborhood. Value high. Overnight low. Overnight high. Very close to value high and low from yesterday. Telling me, that may be an opportunity for us to be patient, to wait for better trade locations as the days goes on. S&Ps are opening with a gap. NASDAQ is not. Same but different, right? So do we have any overnight positioning? I would have to say they're long, if anything. This has been somewhat consolidating. Maybe we got a little bit long here. They've reconciled. Are we getting a little bit too long here before the open? I'm going to say we're going to have to wait and see. I'm looking at really focusing on, right for now, overnight high and value high from Friday, overnight low and value low from Friday. As for kind of initial ideas for some potential opportunities, gold. Okay, we get the weekly highs and lows marked here again for the gold contract. Mostly just kind of range-bound indecisive activity last week. Friday again, just like the NASDAQ, or Thursday again, just like the NASDAQ. We put in the weekly high and the weekly low in one day. Looks like we're going to be heading for a test of that. The market really kind of finding buyers right off the open. Look at how low the volume was on Friday. Just no real activity. But again, we apparently still added some open interest in this, so there's some energy coming into this market. If we were to look at this, we've been putting in overall higher highs, higher lows, higher highs. Are we going to put in a higher high this week? It's looking pretty probable right now. Take a look at the 30-minute chart. Settlement down here, 1767.70. Opening with a gap. Opening range, the low of the regular trading hour session. Last week's high in sight. Market really kind of looking like we have built some energy into this market. If we take out that 1790 last week's high, we're looking at 1807 up here, which is the weekly kickoff high, which remains from last week as well. So we may get some adjustment in inventory at last week's high. I think the real adjustment in inventory in longer time frame is going to come up at 1807 if we have the opportunity. Don't really want to step in front of this. We do have a lot of overnight longs here that are just being emboldened by the activity since the open. Again, that opening range low of the session, 1780.60. You might want to put that on your chart. It may be useful and helpful for us if price goes back to that level. We take out the opening range low with all these longs in the market. It may give us a push back to the downside. But again, I don't want to push. I don't want to fight this move to the upside. It seems like it's pretty strong. Again, opening range the low of the session keeps me looking for longs as we continue to move higher. 1790, last week's high. Well, to be sure of it, 1789.90 to be precise. Nothing is precise in futures trading. However, everything is more of a zone. So we may get an opportunity to see this price up at that level to see if there's an opportunity for us. The euro, boy, what a nice break of that trend line last Friday. Boy, if we were paying attention and timed it right, we really got a nice downside opportunity. We've been holding this upside structure. It's been holding volume overall. We did lose 7,100 in open interest on Friday when this trend line broke. Boy, it sure scared a lot of longs out of those longs. We got a pretty decent profit-taking or long liquidation event on Friday. Where does that take us? Well, it takes us back to a little bit of a consolidation area that may actually end up being an area of demand. We've tested the last week's low already. Last week's low was 120.26 and a half. Our low today, 120.23. We looked a little bit below it before in the extended trading hour session. So again, we've broken this upside structure. Do we start to look for opportunities to sell strength here? Time will tell. Overnight test of the last week's low, of course. 30-minute chart. Here's our break and our continuation below the break of that. Our weekly low, we looked a little bit below it last night. Settlement is here. Settlement 120.32 and a half. Put that on your charts. We've opened in an area of possible repair. You can see that there was a somewhat of a consolidation, or at least an accumulation of time and volume up here. We have a single line of TPOs if you're looking at the TPO charts here, and then we have another consolidation here. We've got the high volume node from the lower part of from the lower distribution, probably going to be pretty close to this 120.44.10. If we have a high volume node up here, that high volume node is going to be just above value from Friday. So I'm looking at a possible, kind of a ranging day to go check this high volume node, go check this high volume node in the point of control before really finding anything directional away from this area. We're in range, we're in value, we have some overnight longs. Stay patient as opportunities may come as the day goes on. And the 10-year. We keep adding open interest. We added another 70,000 on high volume on Friday, but a very narrow range. We basically had inside day and then another inside day that may be changing as we speak. The opening range, when last I checked, was the low of the session. Volume in open interest, kind of indicating there may be some energy building in this market. We're going to have to look for those opportunities. Weekly high, weekly low. In the middle of it, weekly kickoff high, weekly kickoff low. In the middle of it, I'm not in any big hurry to necessarily get into anything for a bigger opportunity. Now, here we've got the opening range. Okay, opening range is right here. Where was that? Let me line it up here. Yes, 132 and 29 seconds. The market has come back to retest the low of the opening range. This can be a decent opportunity to look for longs. It's also a decent opportunity to limit risk. We take out the low of the opening range. That may mean that the early buyers have vacated the marketplace, and we may see this market come back into range and value. Very narrow range, very narrow area of value from Friday. Try and stay patient in this market. It looks to me like it's going to be a little bit choppy here, at least for the first part of today and the first part of this week. All right. So we're just getting started. No reason to get too excited. No reason to get too busy here. It's Monday. There's going to be a lot of opportunities this week. There always are. Stay patient. Be good to yourself. Make sure that you remain humble, grateful, and creative in your trading today. I'm going to take my deep breath. Get out there and profit. Have a great trading day. And we'll see you later on. Dan will be with you for the market recap, and I'll be back tomorrow morning for the market forecast. Trade well today, everybody. I'm just going to see if there's any new comments here. Richie B starting the 100K combine today. Good. Richie B, best of luck to you. Look for those asymmetric opportunities where there's a little risk for much bigger reward. We're looking forward to all of your success. Now, get out there, stay patient, profit, trade well, and we'll see you later.